A moving average is an indicator. It's also known as a lagging indicator. All that means is it looks at past price data and presents its results using that. What can a moving average do for you? It can determine a trend, if the trend is upwards, if the trend is downwards, or the true value of a share or commodity. Because what it does, it smooths out the data, it smooths out the noise. So where you see sharp rises and sharp lows, okay, it smooths out that price point so you know what the actual price should be if you get rid of the noise from the market. Step one, you have to decide what time frame you're going to use. Generally, I use a 1 hour time period because I'm a day trader. I want to go in and out of the market within 12 or 24 hours. You can use 10 minutes. If you're doing very, very quick trades, 4 hours, 1 day, 1 week. I would recommend as a day trader, you don't go any more than 1 day. Okay, let's put on our first simple moving average. So you go to indicators. It's going to be one of the most popular ones because everyone uses it. All right, this bit here where it says the period, I've got in a 1 hourly time chart. So if I put 5 here, it's going to average out the price for the last 5 candlesticks. I'll give it a nice white color too. The price, you can choose open, close, high, low. It doesn't really matter which one you choose as long as you're consistent in what you use, because it's all relative. So I plotted it, and as you can see, it's smoothed out all these price points. Where you can see the price has gone quite high there, it's come back down. It smooths out all those prices. When I do this, I actually use 3 simple moving averages on one chart, and I'll explain why. I'm going to plot my second one. This time, I'm going to do a 10 period moving average. And I'll do it a blue color. So it's going to look at the last 10 hours. And you can see it's even more lagging. So that's why it's a little bit higher at points. And the last one I'm going to do is a 50-hour time period. Okay. As you can see, this is our 3 moving averages. The white one looks at the last 5 hours. The light blue one looks at the last 10 hours. And the dark blue one looks at the last 50 hours. Okay, how would I use this then in my actual trades? Now for me, when I see this, okay, and I was trying to buy, for example, this is the actual price point, I would have bought about here because that is below my 5-hour period, 10-hour period, and even my 50-hour period. So I know the price for this is coffee is massively undervalued, okay, because the 50-hour period, it should be around $97, whereas at this point it got to $95. So the price will go up, okay. Now at this point here, okay, this is the indication that you should sell because it's gone above your 50, your 5, and your 10. Okay, so this is a good indication that you should sell. And if you did sell, you'll be correct because look, it dips below all your moving averages and it goes even further down. Okay, we can look at this at any point. Now remember, it's not 100% accurate, but it's just the indicator. It gives you a good indication what you should be doing. Again, you can see over here, it's gone above my 5, 10, and 50 moving averages. So it's an indication that I should sell if I was holding on to stock, or I should short sell. Okay, and eventually the price goes down. Now, one thing to be aware of is the trend, the direction of the trend. You see here, the trend is going downwards. You can see it's on a downtrend. So what you don't want to do is buy at this point because the general trend is downwards. Okay, because what's going to happen is you can see you're going to lose a lot of money. So the key points, it's a good indicator to see how undervalued or overvalued a price is, but always follow the trend. So for me, if I try and find a good example, Okay, here, the trend has been downwards, then the trend changes. So as soon as it changes and I can see the trend is going upwards, what I would do, I would watch it a little bit, okay, and it confirms the trend, and I would buy at this point here, where it's gone below my 5 and 10. It's going to go below 50 because the price of coffee was a lot higher before. So I would buy at this point here, okay, and I'd let it run, and I would try and sell around this point, okay. And if you want to short sell, obviously you can't start here because you don't know what the trend will be. So you give it 1-2 hours. You can see it's a downtrend. So what you want to do is buy around here, and then you could have sold at many opportunities here. You can see both those, all these prices have gone below my 5 and 10 hour and even 50-hour simple moving average. This is a good indicator to use to know again when to buy and sell at. But remember, the key point, always follow the trend. Do not try and go against the trend just by using this indicator alone. Okay? Otherwise, you'll be losing a lot of money. Always follow the trend. Now, the next thing we'll look at is an exponential moving average. It's very similar to simple moving average. However, an exponential moving average, EMA, it gives more weight to the most recent price point. So if I was to go on indicator, okay, EMA, which is the exponential moving average, and I do again a 5 period, I'll do a different color so you guys can see. All right. Now the white one was my simple moving average, and the yellow one is my exponential moving average. All it's doing is giving more weighting to the most recent price point. So in a sense, it is more accurate. Okay. So it works in a similar way, but it gives a bit more accuracy, or gives more weight to the most recent price points. And again, you can use exponential moving average to figure out your buy and sell points by having at least 3 of these. Hi guys, thanks for watching this video on moving averages. I hope this helps you in your daily trades. Please like and subscribe, as this helps me and supports me in making a lot more videos for you guys. Thank you.